Well, I think we were in a period for almost a year where many folks were expecting a very fast recession, and that obviously has not transpired. If anything, like basically unemployment rates today are the same as they were a year ago. It's not to say we haven't seen some slowing of the economy, but the sort of recession now that had been expected both at the beginning of the year and also right after the SVB situation hasn't materialized. And the reason why that is because the economy is not as sensitive to rate hikes as I think many people expected. And on top of that, macro cycles, take a long time to play out. It takes a long time for that elevated set of interest rates to flow through to slowing borrowing and slowing economic activity. But I think the thing that is particularly interesting today is that just at the time when, after a year of no recession, everyone's giving up on recession, right? In the asset markets, how things are being priced is basically that we'll have a no landing or a soft landing scenario. Just as that's happening, we're actually starting to see the dynamics that would typically align for a recession on a forward-looking basis. And so I think that's a very interesting circumstance because particularly as you're trading financial markets, you're always trading against what's priced in or what the consensus expectation is. And I think just as, everyone has given up on recession, the probabilities of it have gone up considerably in the last few months.
Yeah, as everyone's giving up on it, the probabilities have gone up. And you can correct me if I'm wrong, but I believe if you go back a year ago, you weren't expecting a recession. But remember that there's that article that came out, it was like 100% probability. I feel like you were not expecting it. But I do want to get a follow on here. If suddenly asset prices are pricing for the no landing, soft landing, but yet the dynamics are aligned for a recession looking forward. I want to hear more on that. And are you now expecting a recession go forward?
Well, yes, I'm definitely expecting a recession. To be clear, I always expected a recession, but what I said a year ago was that the recession would be much later than people expect and also much harder. And I still believe that dynamic is playing out. If anything, it's been even a little later than I was a totally non-consensus when it came to how late it would be. It's been even later than I expected. I was thinking that it would be the last couple of months of 23 a year ago. It looks like for a variety of different reasons, particularly tied to sort of the mini stimulus that has occurred on the fiscal side of things. We're probably pushed into sort of, March, April of 2024. But there will be a recession. And when I say that conditions are aligning, you're getting the type of typical dynamics that lead to the ordering that creates the recession, which is that we had a tightening on the short end. We've now had a meaningful rise in long end interest rates. We're starting to see stock prices fall in response to that. They haven't fallen that much. In fact, they haven't even fallen that much relative to how far bonds have fallen, but stocks are starting to fall. And we're starting to see the underlying weakening in those cyclical sectors, as well as in the labor markets, which are starting to soften a little bit in a bunch of different ways. And that whole dynamic is basically putting us on a path where, something like 3 to 6 months from now, we're most likely to see a deterioration that's coming at a time when, particularly when you look at the equity market, expectations of earnings growth are relatively extreme. Right now, the equity market is pricing in a 25% increase in earnings over the course of 24 and 25. So that's pretty high, particularly when you think about, what nominal GDP growth is likely to be. And so that's really the divergence, which is very, very high expectations of earnings growth in the bond market, in the stock market, at a time when we're starting to see those macroeconomic dynamics align for a recessionary experience in early 24.